So I'd like to say thank you as usual to all of our audience for joining today. I'm always excited. Everyone knows this. Every time I do a podcast, I'm like, oh my God, she's so amazing. She's so cool. But the truth of the matter is that when I get together with other Black women, that's just genuinely how I feel. Like I feel the excitement, I feel the buzz, the frisson of energy that we get to share, not least when it's showcasing our expertise. Like this is what gets me happy. It's not just that we're Black women getting together just for the sake of it. It's Black women with expertise showcasing who they are, what they do, what they're about. And this is no different with my guest today. And before I kind of hand over to Lydia, I'm going to caveat everything that we discussed today because we will be talking about information flow and investment strategies and tangibility. But what I really want to make sure that everyone's aware of, this does not constitute investment advice. This is for educational purposes only. This is not for you to take notes and go, okay, Lydia and Leanne said I need to be investing in this. There will be no mentions of stocks, share, anything. We're just talking about it. It's how we see the world and how we see the possibilities for us as Black women to build generational wealth, but really strong foundations. So anyway, without further ado, Miss Lydia, I'm going to hand over to you for you to introduce yourself to our audience.
Thanks so much, Leanne. Thank you for having me. It's been a joy to be able to speak to a more women-filled audience in the past probably the past 1 year. I'm really happy to join you today. So, like you said, my name is Lydia Idem. I am an investment advisor. I'm also a VC. I'm a venture capitalist. Started my career with advisory, though, really with the aim of getting more Black people, more investment advice and increasing wealth. Understanding as I started to work more in the industry, understanding that the wealthiest people don't go at it alone. Investing is not a do-it-yourself endeavor. You actually do require a team as you would in anything else if you're wanting to be successful. And so I wanted to provide investment advice and wealth management services to our community at a price that we could afford, because I think it's just largely it's outpriced. Prices is out of the market. And so our firm says that FM Capital Group. And so we've been around for 7 years now. And 100% of our clients are of the African diaspora. And we do a plethora of work, but I say our niche is that we provide access to venture capital as another asset class for whom it's suitable for their portfolio. And which leads me to VC. I am a VC, a proper VC, a fund manager as well. We invest in Africa and Latin America, which is where we place clients as well. I've always believed as a Nigerian American, I've always believed that the opportunity for investment lies in Africa for a plethora of reasons: valuations, opportunity, challenges, population, and that we should largely be invested there as those of us who sit in the diaspora. So like I always say, don't let the accent fool you. I'm a Nigerian. My parents are both from Nigeria. Clearly, I was born and raised in the US. And I always thought that opportunity to invest in Nigeria would come through real estate as a younger person. And blessed to grow up in Silicon Valley in the Bay Area and learn more about tech and clearly about VC. And over the last 10 years, technology has democratized venture capital as well as probably every other sector. And it's our time. It's our time to move in with our capital, especially for those of us who sit in markets that are flush with capital, and to take advantage of the opportunity to not have only real impact, but also real returns. And so that's the basis of my work, which I absolutely love. And so to that end, I worked with Lofty Inc. Capital Management as Chief Operating Officer, where we have 3 funds. And I say we're about to launch a new one, but we're getting ready to put out a new fund. And for the sole purpose of, we believe that job creation is the way that we create an equitable and prosperous Africa.
You've said so much in there. Like, I know everyone's gonna be like, oh my gosh, oh my gosh, oh my gosh, where to start? But you know what, the one thing I definitely want to start with and I know this is a little I'm going to call it a sidestep for purposes of where we're going to. But it's very interesting in terms of information flow. And I'm going to take myself as a perfect example. Growing up, the continent of Africa was in the UK market. You only saw two sides. One side was the royal family going on their safari, and the other side was, helping emaciated children, whether it was via Oxfam or all these kind of either other things. So the flow of information really ignored the extent to which Africa is a global resource, that without Africa, the rest of the world has nothing. That Africa is the only continent that if all its debts were called in based on physical commodities, it could actually fulfill its debt obligations. Like, this is what we're not told. So even as we speak about the continent being a place of opportunity, it's still fighting against this narrative that's still being perpetuated now, which is, Africa's high risk. You talked about also Latin America. These countries are high risk countries because. Yet the other reality is that all big corporates are invested directly in Africa. I think there was an article I read last week just talking about, for the fact that all of our iPhones do not work. They were talking about the extractive industries within the DRC.
Yep.
This is what we need to understand, is that, being a Brit Jamaican, even looking at that from the production of bauxite, looking at who owns, where is the source of wealth within Jamaica? It's from China. It's this realization that we as the diaspora, the African diaspora, have to understand, is that there's a reason why the other narrative is coming forward for this part around opportunity. And to your point, tech has democratized access to these markets. But we're also seeing that if you're going into these markets, let's take, what's his name again? Sam Friedman, FTX guy, that if you're going in it for purely extractive purposes, you do more damage to the people on the ground than anything else.
Yes. So you're like, I feel, and I feel like the narrative that has been perpetuated for decades it feels like it's to keep us disconnected from the opportunity, because quite frankly, we're a more communal people. We have community values, and it strongly contrasts, like, you're sitting in Britain, I'm sitting in America, which is like number one, individualism. And like, if you even depend on the community, then you're a failure. And I feel like that narrative that, you pull yourself up by your bootstraps, but then you also should be afraid of anything outside of, the US borders, is to keep us disconnected. Because if we truly were communal, if we truly understand, okay, I'm here, I don't necessarily need to go back to Africa, but I can go and invest. I can go and visit. I can go and build. Like, the impact is incredible, but so is my returns in my financials. Okay, let's also keep it real. Clear. Right. I am an investor. Right. And capitalist. I just think I do it with humanity, and I want to do it with purpose. I do want to make sure we are being positively impactful to the companies and the communities and markets in which they serve. So there is a way to do this capitalism thing and still have a heart about it, and still do good, and not have to be purely extractive. It makes me wonder, like, why couldn't Apple set up a lithium mine with a lithium processor right next door, and an iPhone manufacturing done right down the street, all in the DRC, and then export? It's actually be cheaper. Right. Our iPhones that actually cost $300 and not $1,300. Okay. Right. So why do it the other way? Why not set up those kind of linkages on ground or in country? So it just, again, for me, the narrative is to keep us disconnected. And it's one of the things that in our firm at FM Capital Group that we, in the beginning days, we had to battle. So we started off, our approach was educational because the Black people which we were serving didn't want to have anything to do with Africa. They were very fearful of the market. They didn't want to have anything to do with anything they couldn't see, touch, and feel. And the fact of the matter is, we need all of these asset classes, not just the one. And I always know that another narrative is you should invest in stocks. You should invest in stocks. You should invest in stocks. But what about venture capital? What about real estate? Like, the general narrative is invest in stocks, invest in stocks, invest in stocks. But venture capital, oh, you need to be accredited. Oh, real estate, you need hundreds of thousands of dollars. You have to just keep in mind, I love that you said this, keep in mind what these narratives are that are being pushed. I think a prevalent right now is that crypto will save us, or crypto will bridge the racial wealth gap. Again, multiple asset classes, not just one. And your allocation into those asset classes matter too. So, people will call it diversification, but here's another narrative buster. Diversification is for wealth preservation. For those of us who are looking to accumulate wealth, we need to concentrate our wealth. We need to concentrate our investments, okay? And then you diversify. So then you start to think, well, which asset class should you be concentrated in? And then that takes us to, as an investment advisor, that takes me to well, what's your situation? What are your goals, et cetera? Because It's not a one size fits all situation. But be careful with all of these different narratives and what is the aim and to what end and who is it being pushed towards? So, there's a middle class agenda as well as a Black agenda. And so, and sometimes these narratives converge, or, there's intersectionality within those agendas. Actually, for us as Black women, we see that a lot more clearly than maybe others. But I agree with you. These narratives, these very popular narratives, we need to really understand what is it rooted in and what is the real aim.
Yeah. And there's three things I wanted to come back to you on. The first one was this idea of responsible capitalism. There is the possibility, and this is what a lot of organizations, despite what they say, they're still not getting to grips with. You can combine profit and purpose. You can do that. But to your point, as Black women, we have to be even more acutely aware that how we decide to invest and how we decide to operate still has that in mind, and that you're not being persuaded to pick profit over purpose in that sense, or doing good in the community. Because if we're going to talk about sustainability on the one hand, we also have to understand that what we take out of a community also has to be replenished. And that needs to also be reflected in the way we decide to invest, who we invest with, what are their barriers to entry. And like you said, I love this part where you talked about the middle class agenda and the Black agenda. And sometimes the middle class agenda, if you're Black, you don't quite fit in there, because to your point, the access points from a financial perspective, I was asked to be an ambassador of an investment advisor, and their threshold for an individual was 100K. And I was like, well, as a Black woman, I cannot knowingly advocate for 100K as an entry point into being able to, preserve wealth. Because as anybody who's within the Western Hemisphere, we are absolutely in accumulation mode. That's what we're trying to accumulate. And one of the things you also said that resonated is, and I think of it, in the context of, if you're starting a business, your business is to find your niche. You cannot try to be a jack of all trades. And it's that same thing about concentration. Diversification works in the sense of preservation. but it doesn't work in the sense of trying to accumulate. Focus on one thing, do it well, then generate returns, and think about it like that. And it's that part also of working with what you have, and this part around individualism, I find it a really interesting concept, that we can always say the famous African proverb, it takes a village, but we only apply that to child rearing.
Correct.
You don't just take a village to raise a child. And if you look at the most, I'll take the UK as an example, and even actually I'll also take the US. If you look at the most successful communities, whether you want to call them immigrant communities, invited communities, but well, even the Brits aren't even indigenous to the UK, but I'm going to say non-white communities, the most successful communities are those who work together, where one person goes or two people go, they build a business, they buy a house, they invite the next one, but community builds a broader foundation. But for as long as we have, and when I say, I'm going to call it diaspora rewards, and I'm going to bring a little bit of, stuff that's been going on from the point where you still have these conversations like Akon talking, and I know we don't care about Akon, but it's the sentiment behind it. African Americans are African wannabes or something. He said something along those lines. I don't remember exactly. But as long as we have these wars amongst the diaspora as to who is better, we lose focus as to what we should be doing, which is investing to create community, investing to also generate a return to build our own wealth, but also because you're putting that back into the community, it's creating that effect of a virtuous circle instead of a vicious one.
Exactly. And let's not forget too that impact creates wealth for those communities as well, and for those people in those communities as well. And so it's not just my wealth that gets increased, it is their wealth that also gets increased. And then they start investing. Okay, so it's like it's what we see in VC, in venture capital. When we have successful founders who've had successful exits, they themselves become investors and invest in more founders, right? They also they might start another business, but they will be investing as well. And so that virtuous cycle is what we are trying to activate. That's what I'm looking to activate in my work. And so I want wealth increase for all people. So whether you have something and you're looking to multiply it, we're here for you. If you are a founder and you need capital to increase your business because you're going to create jobs, your product or service list solves challenges, makes life better, then that's what I want to do as well. Because I understand that as you're hiring, as you're creating jobs, those folks now have wages, sustainable wages, consistent wages that they can count on and can then plan. And once you can plan your money, you can multiply your money. When it comes in fits and bouts, you're living that paycheck to pay, like even paycheck to paycheck living. At least I know it's coming. At least I know it's coming. It's not ideal.
It's gonna happen.
I can plan for the first, the 5th, or the 10th, or whatever it is. But when it's like, okay, I only have this one, and now I got to go back out and hustle, and I don't know where it's coming from again. That's the cycle that needs to be broken. And that's a cycle of poverty that needs to be broken. And that's why you can find poverty in a middle-class household. You can find poverty in a wealthy household, quite frankly, just because of that mindset of not being able to plan for your money, not having consistent cash flow. So that's the bigger impact, is that our investing can create wealth for not just ourselves, but for others, which in turn, again, creates wealth for others. So those ripple effects are what I just speak to amplify. And so I'm just like, we all need to be invested. I think everybody should have venture capital, again, for whom it's suitable, but everybody should have the VC in their portfolio, because that virtuous cycle and those ripple effects are tremendous, particularly in our parts of the world.
100%, 100%. And I think, I call it the circle of money. Your ability to earn has an effect on your ability to save, which has an effect on your ability to invest. And if we're not in that cycle at any point, it makes it very difficult. And if there's that instability and insecurity, because ultimately, if you don't have the space to invest, then you don't have real prospects of growing your wealth unless you happen to become a celebrity. We know there are exceptions to every rule, but but unless you have that, and I think this is why it becomes so important when we're in that position to make that decision. Or it might even be, you choose to invest over saving. You take your disposable income to invest because you think about making your money first. But to your point, to go back to when we're looking at that narrative, and this is something that's always bothered me in my asset management days, was why do we try to get away from this concept of cash is king? Why do we try to get away from, we talked about this before, tangibility of assets? Because even the richest people, the richest people in the world, yes, they may have a tech platform, but behind their tech are physical assets that they can touch. Be it buildings, be it land, be it farms, be it airplanes, boats, whatever. They have tangible assets. And it always makes me question, when I see, cash is the last bearer instrument, blah, blah, blah. And, we talk about it being, to think about the black market and whatever. But when I see this kind of narrative of investing in something, we talked about real estate, right? And you're being offered an investment in a real estate fund. How much of that property do you own? Or do you own a share in a real estate fund? Or I feel to some extent, we're still being discouraged to own. And the hurdles to ownership are becoming increasingly more difficult within the Western context. And I'm like, well, where should we be looking for? How are we thinking about this from this is just my own personal opinion. How much of my portfolio is tangible? How much do I own of anything really? If I don't own an apartment or a house, for example. And I know you're giving me side eye for that. But how much of what I own is bricks and mortar or something that I can physically retreat to?
Yeah.
And it always worries me when I see a push away from tangibility, because that makes me feel uncomfortable.
Yeah.
And I'm not sure if it's an age thing or a generation thing, but it just makes you go, oh no. And you kind of get told, and I'm not saying to anyone that they shouldn't invest in crypto, that's not what it is. But it's always that part of you, if you don't do it, you feel left behind. But if you do it, you feel like, to what extent should riding the wave is the best way for me to explain it.
Yeah, no, I think it's an important part. And I think until you brought it up, I had never really thought about, ownership comes with hard assets. And I know our younger folks or our digital native people will debunk us on this and actually I welcome the debate. So please give us your opinions on this. Because maybe it is generational, but I think that it's super important for your portfolio to have hard assets. And maybe we need to even broaden the definition of investments, because I think investing includes owning your own business. It includes owning your own land. It can include what people typically referred to as depreciating assets, but it also, like cars or things like that. But it also depends, well, how are you using those assets? Because can you resell it for cash or for another asset? You can. So it's depreciating, it will be less money then, but you get something for it, right? You can do some trading around it. So I really do believe in ownership. I really do believe in accumulation of hard assets, because you can, the barrier to entry is so much lower for your digital assets. which is why people have crypto over stock, because it's only few brokerages that will allow you to buy a piece of a stock. You got to buy a whole stock. So if Amazon is $1,000 a share, you got to come up with $1,000 if you want one.
and that's when they don't.
You know?
Yeah, and that's when they don't have the limit where you have to buy 10 of each stock that you want to buy.
Because you coming in with, exactly, because it already costs $1,000 to begin with. So you can buy one, but it's rare that you can come in with 10. It's very few that allow fractional trading, which is why crypto becomes so accessible, because you can get a piece of a Bitcoin. And I like the biggest narrative to Bitcoin when it first became popular back in 2016 was people understanding this concept. Oh, I can't get Bitcoin. It's $5,000. It's like, no, and no. You can buy $1. You can buy fractional, because you can get Satoshis, which is a fraction of a Bitcoin. And so that's why crypto is just so much more accessible, because you can buy fractions of it. Now, yes, there are brokerages that allow you to buy fractional shares of a stock, but those are still very rare. And they're geared towards a younger clientele. To be more accessible, clearly. So that's why a lot of us get pushed into digital assets. And even stocks have become digital assets too. I mean, yes, you own a piece of the company, but unless you're exercising your proxy and you're participating in the shareholder meetings, and which you should be, then you're just owning a digital asset which you have no decision-making power over. And so when you buy stocks and own stocks, you definitely should be exercising your rights as a shareholder and participating in those meetings, which are on Zoom or teleconference, and voting your proxy. So look into that for those of you who don't know. And all of your companies should be sending you that information. And if they're not, they need to be flagged. So that's that. Because at the end of the day, we need to own. Like, that needs to be your largest investment in whatever it is that you own. So me as an entrepreneur, I know my biggest assets are my businesses. And the next would be VC and the ownership I have in those companies, right? So, and that's where you need to understand, like, what do you own that's tangible? What ownership do you have in your portfolio? And if you don't have enough of it, that's where you need to be focused on in this new year, is accumulating cash to purchase and own something. And then cash is king. And, there's an adage out there that say people want to say credit is king, but credit gets us into that non-tangible stuff, y'all. It gets us more into that digital stuff over there. So, cash is, to me, if you feel like you're not owning anything, own cash. And that means you need to stockpile, you need to save. And then what I tell clients is that savings is your investment money. You need to be comfortable with the fact that you need to invest a part of your savings. And the younger you are, the more of that savings actually you should be investing. And I know that flies in the face of household knowledge or household wisdom, but we have to divorce ourselves from the fact that our savings is going to save us. It's not. And in this high inflationary period, which many of us have never seen before, many of us have never experienced this kind of inflationary period, we have to invest. Your cash is going to be worth less. That $1,000 sitting there is going to be worth less than it will be next year, especially, and I'm talking current inflation trends. And it won't be able to purchase as much. Okay.
I see.
So the next point is, like, there are no interest rates. Okay, interest rates are rising, but some countries are coming out of negative interest rate environments. Okay, so interest rates may be rising, but not to a level where you're going to see a coupon payment or interest payment that's going to do anything for you. Okay, so let's be very clear about the urgency behind all of us needing to invest in things that you're actually owning.
Yeah, And I wanted to just come for what you said, which is, you said it flies in the face of household knowledge, but we have to also be clear in the face of whose household knowledge, because that knowledge is very much aligned to whiteness, who, even if they're not rich, they're still generational wealth, whether it's someone owned a house 200 years ago and that house has remained in the family, which means they don't have to put up the capital. So we are in a different phase. Accumulation means acceleration. Looking at the economic climate, our purchasing power won't be what it was. And there was something that I thought was really, there's something that you said that was really liberating. And the reason why I thought it was liberating, because when we use the word investor, it has that connotation of super billionaire over there, you know. And what you've said, and this is what I think is going to change the mindset of anybody who listens to this, is understand that you make investment decisions in your daily life, because when you decide to purchase your car or you decide to purchase your house, you've done calculations to understand, well, if I buy this house now and I'm looking forward in 30 years, do I believe that this valuation that I have today will hold its value in 30 years' time? You are making investment decisions. People won't think of a car purchase as an investment decision. They won't think of a mortgage in terms of being an investment decision. They'll think about, well, I wanted to buy a house because I know it's important to own a house, but they discount the knowledge that they're using, even from like discounting. They discount the knowledge that they're using in order to be able to make this purchase.
Yeah. And I think it's important too to feel, to understand and to be okay with the fact that not all investment decisions mean a return. Like some investment decisions mean that I need it as a means to something else, right? So it's like, so never feel like, oh, I bought a car even though I knew it's going to depreciate, but you need that car, and that car is going to make you more money. And so some investment decisions are a means to making more money, which then means that, okay, in the end, it was a good investment. So I think, so just broaden that the end game as well. Like it's not always about the return. And we talked about it earlier, when we're investing in certain regions of the world, it's not just about the return, because if I wanted a 10x, 20x, 100x return, I stay right here in Silicon Valley. But if I'm okay with a 5x, 7x, 10x return, then I'm investing in Africa. I'm investing in Latin America. I'm investing in my people, understanding that it will take longer because the challenges, and not just the challenges with the business that the business is solving, but just infrastructure, just things that we're not paying for that need to be paid for in other parts of the world. Well, it will take longer. And so my return expectation is different. And so we all have to make adjustments. So, there are investment decisions we make where we know, okay, this is going to take a long time, but I believe in this person, I believe in that business, or I just like this car. I just like this car. Okay. When people see me, I'm going to get into rooms. That's my investment. And those are okay.
But one of my mentors always said to me, and she talked about this, like it wasn't in the terms of investment, but it was just in the terms of like anything you do in your business. She goes, you will always get paid, but you have to understand that getting paid doesn't always equate to money. It may not equate to money, but the point is, like you said, we have to almost decouple return on investment, that the return is a monetary return. You bought the car, the car enabled you to work, the work led you to be able to earn money. So there's your return. The ability to earn money is your return. The money came later because that was a product of the work, but it all fits together. You will see a return. The question is, do you value that return? Do you understand that it doesn't have to be a physical? Because if it's enabling me to work and I go from a situation of having nothing to having something, I'm quids in, I'm happy.
Yes, yes,
And I
yes.
think
I love it. That was well said. Decoupling it from the financial return. Yeah, yeah.
because we think about it, and you know, sometimes, and I don't know how you see this, but as you said, when you could invest in Silicon Valley to get your 10, your 100x, 200x, 1000x returns. And sometimes when I think about it, I think to myself, but how sustainable is that? Because when I read about some of these experiences of people in these companies that blow up, most of them are on the verge of burnout. By the time they've had this X level of valuation, they don't stay in the business that they made all this money from. And then, they're sitting on their millions and they're like, okay, now I'm going to do something that I'm passionate about. And you're like, which to all intents and purposes is still extractive, as in from a human perspective. And I always think I would rather have less of a return knowing that what I'm doing is building generational wealth, community, resource, education, infrastructure, but is also serving the people who are within the organization, not just the people who are, on the receiving end of the services.
So, you know why it's not extractive? It's because the money stays here.
Right.
It doesn't go anywhere. And that's like, you can have the privilege of, selling out your business. All your people are either have money too, maybe you've made them millionaires, and other employees still hold equity, they still have jobs. And I have the pleasure of sitting here. My taxes pay for the infrastructure that I enjoy, because I can sit on my mountain of money, and my mountain of money stays right here where I made it.
Yeah.
And that's the difference between our communities, is that that money invested right now, especially foreign direct investment, doesn't sit here, doesn't stay there. And so people will push back on me too, like, oh, well, doesn't it mean that African Americans investing in Africa are being as extractive as the Chinese or the Europeans or the Americans? To where I say no, for a couple of reasons. One, we're likely to stay there, and it doesn't mean that I'm going to move there or live there, but I'll be back. Like, I'm going to visit. I'm going to spend money there. Like, I'm going to put money into circulation, into that economy. Two, I'm going to look for the next deal in that region. Like, I'm not just, my money doesn't just leave. My money likely stays and recycles. And so we have more of a concept of recycling upon success, as opposed to like escaping and getting out of Dodge upon success. And so that's where I think the biggest differences are. And three, really, once you get a taste of Africa or Latin, you probably will move there. I mean, as a Black person, like, just the elimination of microaggressions, where you can just really truly walk into a space and it's about merit and truly how put together I am, not my skin, but because I look good, because I'm dressed well, because I have degrees. Like, all of those things matter, but period, and that's it. It's a nice feeling. It's a nice feeling. You might move there, but I think that it's totally different as diasporans to invest in Africa than it is for non-Indigenous people. I think the mindset is just very, very different. It's very different. It's the same fear that Americans have of Chinese investing in America, because that money is going back to China. I mean, it has to, in fact, like, lawfully, they have to take their money back to China. So it's the reason why Americans are all up in arms that, the Empire State Building is now owned by Chinese investors. They're all up in arms that all these, yes, girl, that all
I didn't know. My face is
all this swaths of farmland in the Midwest is owned by Chinese. Like, there is a quiet concern around that. We don't have the same kind of laws for ownership anyone can own in the US. If you got the money, you can own. All right. It's not the same as in other parts of the world where you need to be a citizen of that country. You need to have been born in that country. Some countries go to that extent. Like you need to have bloodline here. We don't have, that's not the same thing here. So there's a reason why any country should be concerned about foreign direct investment, because where does that wealth land after it's realized?
Yeah, well, the Europeans like had the same thing, and that's where the German government and the French government stepped in it, and they were like, "No, you can't buy nothing else. Government's buying up everything. No, 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 no." Yeah,
exactly.
And, and then purchases happen via layering. It's a trust fund and blah blah, and then when you go back, it's that part. And do you know what I also think? And I don't know. This is just how I would see it, or how I see things, because I'm, thinking more, or not thinking, I've been thinking and working on a project over the last year, more details offline for you. But when I think about us being born in the UK or born in the US, we still have an idea as to what we think good infrastructure will work, or like what good infrastructure would make our lives easier. And if it makes our lives easier based on how we've grown up, it will make the lives of the lives of those who actually live there, the locals, a lot easier too. And you take the care and consideration, as opposed to being dismissive of it being a third world, emerging, developing country, because you don't look at it as emerging or developing. It's developed. It has just been extracted from, and what you're trying to do is recalibrate the original extraction, as it were, to get to the point, to kind of get to this rebalance point. Because to your point, and I think FTX for me is a really good example, because I read this article about the damage that FTX did within Africa, which was it sold a dream of, we are going to help you accumulate wealth, etc. No regulation, nothing, and ended up doing more damage. And this is not to say that I don't believe diasporans can and do these kinds of deals, but what I'm saying is the extent to which it was permissible in terms of capital and investment, that would never happen on a black scale, because no one's giving a black person that much money to do it.
That much legal framework.
Right. It's not, no one's giving someone 350 million to go do this and have access to Africa and blah. No one's doing that for a black person.
It's just a fact.
So for me, it's that part around everyone's still looking at global growth in terms of return generation, but they're still dehumanizing the continent and looking at it as a workforce to generate their returns, not looking at it. These are people with cultures and opinions and wants and needs and desires. And my biggest aim, if I sit in Nigeria, Ghana, wherever, isn't to work just, my biggest aim isn't just to work for a European organization. I have dreams beyond that.
Right.
And I think that will always be the difference, the listening to the community as to what is needed and what's meaningful. I'm going to call it interaction and or collaboration, versus going in, this is what we're doing.
Yes. Let me tell you what's good for you.
I have a really, really great idea. So what we're going to do is we're going to get you some fresh water. Water's not the problem. So what we're going to do is we're going to build these pipes that you can get fresh water out of the taps. Water is not the problem. But you're not listening to us. You're going to have the newest taps ever that are solar powered. Water's not the problem. Ta-da! You've got the taps. Oh, by the way, now you have to pay $100 a week to use the taps. Right. But only $100 a month. That's not my problem.
Right. Correct. Water's not the problem. I have fresh water that comes from a tap. It just happens to be accessed by the community. Nothing wrong with that. Like there's nothing wrong with that. Okay. What, I mean, so you're right. It's like this calibration of understanding, like when we come, I feel for me, like when I come into Nigeria, as more so when I go into our village, like what I find comfortable even changes. Like I'm soon now, I'm now, I'm comfortable with humidity. Whereas in the US, it's like, it's hot, you know, like, you're like, I become comfortable with this. You know, power, you have a power outage and you don't even blink, yo. Like you just don't even blink. Generator comes on automatically. Like when it comes back, power comes back on, generator turns off automatically. Like technology, y'all. Like, you know, so it it's so interesting. Like you will, I feel like we have this adaptability where it's like, okay, well, this is the situation. Cool. Like what what's comfortable? Like what makes me comfortable? What more could I use, or what do I need to even make, you know, my level of comfort? Maybe it's a little bit higher, and that's okay too. But it's the whole idea, like when you come in immediately when it's different, and it's just like you're just you're just uncomfortable, period. And it's only because it's different. That that's the difference. Like that's the difference that you're describing. And it just it shows up in the way we do business. It shows up in the way we invest. It shows up in the terms around which we invest. When you see some of the terms and some of the agreements that some founders sign, and then we come in with our term sheets, and they're like, "Wow!" And they can't even sign ours because they've already signed more restrictive terms. And so, you know, it's also it could lead us down this road of like, not all money is good money, y'all. Like, you know, and you know, just trying to just just always
If you're
play from a
listening to,
position of power.
if you're listening to this and you've not watching the video, I just did a point. I did a point and I closed my eyes and I did a nod. Say it again, please, Lydia, because this is a really,
Yeah.
really important point.
Listen, not all money's good money.
Thank you.
It's just somebody could offer you $2 million for your business, but they want 80%. Does that make sense? It doesn't make sense. Like it doesn't make sense. So
make it make sense.
Make it make sense. You can't make that make sense. And it's so we have to play from a position of power. And I think historically we tend to play small and we tend to play weak, not coming into into a position or into any negotiation from like, I'm here to make you millions. Let's not get this twisted. Okay.
Right.
My business is here to make you millions of dollars. That's period. Billions of dollars. My business. Your money can fuel it or not. It's up to you. But it's certainly not in the place of, oh, please give me your money. Oh, please give me your money. This is so hard. No. And I mean, I was in Guyana last month talking to entrepreneurs, and I can't tell you like how many of them, I mean, more than half of them, that was my conversation with them. Like, you've got to come from a place of power. You're the asset.
Right. But what we still believe intrinsically is, if I don't get this offer, if I don't close this deal, then nobody else is going to close it. So when we already step in with that energy, they're already to lowball because they know whatever they say is going to be a good deal to you.
Yeah.
And this is also, I would say, part of salary negotiation too. It's like you hope for this number, and then you're like, well, if I don't get it, I'll be happy. And we're not taught to stand in our power and know our value. And it's like that for me is a big one, because we have to appreciate that we are in all cases an asset.
Yeah.
We have access to networks, ideas. Black culture is contemporary culture, end of story. So anything that we are thinking, anything that we are thinking is 10 steps ahead. So when you're going in and you're thinking that you're not saying anything, always understand that you're dropping nuggets, golden nuggets, without even realizing. And this is why we also have to be more, what's the word? Cautious in how and what we choose to share of ourselves, of our businesses, of our plans. Because there are still other people ready out there to activate them with more capital, with more connections. And we have to, as you said, and this is why the role that you play is so important, because there has to be that place of trust where we can go. Because how many times are you seeing, how many times do you read a story, black person goes to pitch, the investor steals the idea? It's this part around safely getting advice when it comes to investments, safely getting advice onto how to accumulate wealth in a way that doesn't make black people feel dirty, or because that's the other point. We've been conditioned not to talk about wealth accumulation because, that's what low class people do. When everyone's charged up and, oh, I made this much money, it's a deal, and they're on yachts, no one calls it the same thing. So it's understanding, in many instances, our own relationship with money, not in terms of our spending capacity, but how we feel about it, how we talk about it. Do we even talk about it? Because I think that also puts us in that position of power. I'm not saying if someone offered me 100 million today, my eyes wouldn't be full of stars. Of course it would be. Of course they would be.
Right.
But the question is, if someone's willing to offer me that much as a black woman, it usually means it's probably worth 10 times more. So if you're willing to offer me that, it means it's worth 10 times.
That? Did you catch that? I need everyone to catch what she said, because I thought she was coming with, so what do you want for that 100 million? She said it's probably worth 10 times more. See how negotiating from a place of power versus negotiating from a place of lack? Like, that's the nugget of the day. Okay, whatever you're being offered, no, you are worth 10 times more.
Right,
you are.
Right, because we see celebrities, and I always look at it from that perspective. You see all these celebrities, and they're like, oh yeah, such and such got paid 50 million to do that tour, and I'm like, yeah, but how much did the person who brokered that deal get paid? The black person will always get paid the least out of any deal. So how much is anybody else getting paid? That's what I want to know. I want to know, how much is the person who has broken all these deals getting paid?
Yeah.
We have to, I think, it's that part around questioning. I don't mean questioning everything and sitting there like it's a conspiracy theory, but understanding that as much as people want to say that they appreciate us like they should, take the time to process information, like take the time to take a step back and see, is this legit what it is? Don't let anyone pressure you into a contract.
I agree. No. And I tell founders you should do due diligence on investors. Like, you should be researching us. You should be looking us up. You should be asking other companies that we've invested in, hey, what are they like? Are they really helpful? Are they a distraction? Are they do they apply pressure? So, again, and it's again understanding your worth and what you bring to the deal as well. So it's not just like you need the money, you need the capital, but you're the asset. You're the one that stands to increase to $1 billion valuation that I then get to, participate in. So it's very important. Like, that step back is really doing due diligence. Like, any investor worth their salt is doing some level of due diligence, and we all should be doing that. So if you're in a salary negotiation, have you done your due diligence to see what this position gets in your market and in other markets? Because let's be quite frank, like, we're all competing on a global scale now. I don't care if you're sitting in Africa, if you're sitting in South America, if you're sitting in, UK islands, I don't care. You're competing on a global scale. You need to know what's going on in other parts of the world, however you're doing business, whether it's a job offer, whether it's your own business, whether it's your sector, you need to look at it globally. You need to understand the global implications. And as business owners, like we have to, and it's not just for competition. It's not competition within like the products and services that I'm delivering. It's competition with my employees. It's competition with investors. Like we have to consider all of these things on a global scale now. That democratization that gives us better and easier access is just true across the board.
Right.
And so you're never just playing in your home market.
No. And it gives us a level of optionality that wasn't there before. And
absolutely.
And the optionality doesn't mean because we have so many options, it means it has to be, the due diligence has to be even more on point. Otherwise, you end up getting lost in a sea of bad situations, bad employees, bad deals. It's understanding that there's no rush, because the accumulation of wealth, we're however many 100 years behind. Not everybody, of course, but we're behind. And this wealth wasn't just built in a day, it was built over years and compounded. We're just trying to catch up. But what's the word? They say more speed, less haste. Don't be hasty in decisions, even though you want to be quick about achieving your goal. But so listen, our time has flown by. I can't even believe it. So what do you want our audience to take away from our episode today? And where can they find you? Also very important.
So I would say, well, first, you can find me on all your social media platforms at Faith Might. You can find me there. Our firm is FM Capital Group. You can find us online as well, FM Capital GRP, which is our handle, then as.com for the website. I'm happy you can schedule a call through the website, and so happy to talk about your particular situation and anything you took away from this show, or what any ideas you want to incorporate into your own portfolio, or how to get your own portfolio started. So that's how you can find me and find us. I think the biggest thing to take away is that everyone should be an investor, and everyone can be an investor. And there's no proper approach to investing, or I should say more specifically to starting a portfolio. So if your entry point is crypto, hooray, how can we multiply it and get you the cash you need so that then you can parlay that into something that gives you more ownership stake, because it is that concentration of wealth in owned assets that brings that accumulated wealth faster. And so those are probably the two biggest things that I would say is just, you can invest, everyone can, and there's no one door. There are multiple doors to this game. There's multiple doors to wealth. It's just picking one and then getting into a strategy of concentrated asset allocation that provides the returns that you need to then parlay it into other asset classes, other businesses. And I guess the third thing is y'all enjoy life. Okay?
Right.
Like we said, right. You are an asset. Pour into yourself. Anything that you're doing for yourself is definitely an investment, whether it's getting your nails done because you want to feel good, whether it's, buying a course so that you can learn something more. I mean, anything we're doing for ourselves, because we are the asset, that is also an investment. And I don't think we think of ourselves enough as investments. And so when we think that, we're getting our hair done for this amount of money, it's like, wait, like, girl, no.
If it makes you feel good,
and
you're right, and you're walking with your shoulders and your head,
right? Swinging, all that money was worth it. Brilliant investment. Okay, so change this mindset in 2023, y'all. Like, we are an asset. You are an asset, and move accordingly.
Preach. Well, I have no words to add to that besides amazing. Every single episode I sit here as a host, but I also sit here as a student too. And I just love all the knowledge that you've imparted. The conversations got my mind going, the whole thing. So Lydia, just thank you so much. Everyone, you know where to find me at Leanne on Instagram. I think I'm Leanne Mair on TikTok and LinkedIn if you need to find me there. So thank you very much.